If you own a rental property right now, there's a huge chance you're leaving thousands of dollars on the table every single month. Now, I know what you're thinking. And no, I'm not talking about raising rents to make more. I'm talking about using the right loan, the kind of mortgage loan that can instantly turn your property into a cash flow machine. So let's talk about it. Cash flow is king. The whole point of owning investment properties is to create passive income, not just for the equity. But if your loan isn't structured right, your investment could be working against you instead of for you. Today, I'll show you exactly how to fix that using real numbers, real examples, and a real client story. If you're new here, welcome to the Mortgage Café with Angelica, where we sip on coffee and talk about homeownership, investing, and smart money moves. I'm Angelica with Key Mortgages, your go-to loan officer for home buyers, investors, and families ready to grow wealth the smart way. Don't forget to like, subscribe, and drop a comment below. Tell me how many rentals you own, or if you're just getting started. Okay, so a few months ago, I worked with one of my investor clients. We're just gonna call him Carlos. Carlos owned 2 rental properties here in Georgia. Both were rented, both stable, but the cash flow, barely a few $100s a month combined. He felt stuck. He said, Angelica, I want to buy my next property, but I don't have the extra income or savings to make it happen. After reviewing his loans, I realized the problem wasn't the rentals, it was the financing. He was locked into a traditional 30-year loan with a high rate and no flexibility. So we restructured his loan using a DSCR interest-only program, lowering his payment by hundreds a month. That freed up enough cash flow for him to reinvest. And 2 months later, he bought his 3rd property using that extra income. That's what I mean by turning your rental into a cash flow machine. See, the first step is understanding the numbers. Most investors only look at their rent and mortgage, but you have to go deeper. What's your net operating income? How much is going to taxes, insurance, management, and maintenance? Once you know your true monthly cash flow, you'll see where the opportunities are to create more. Sometimes you don't need a new property to grow. You just need a new loan. Refinancing your existing investment loan, it can do several things. Lower your monthly payment, free up capital for your next purchase, and extend your term for flexibility. For investors like Carlos, refinancing is like hitting the reset button, turning stagnant equity into usable income. Now, here's where it gets really fun, because not all loans are created equal. For investors, using the right program can completely change the game. The most popular one right now is the DSCR loan, debt service coverage ratio. It qualifies based on the property's rental income, not your personal tax returns or your W-2s. And if you choose an interest-only DSCR, your monthly payment drops even more, which means instant cash flow without touching your rent price. And that's how investors scale faster, by structuring smarter. Now, if this is giving you ideas already, hit that like button, subscribe, and comment below. Tell me what your biggest cash flow challenge is right now. I might cover it in my next video. Now, here's something I always remind my clients. Appreciation builds wealth, but cash flow builds freedom. Equity is great on paper, but it doesn't pay your bills. Cash flow gives you the flexibility to reinvest, save, or simply breathe easier. That's why finding the right loan structure isn't just a financial move, it's a lifestyle move. Now, once you optimize your current rentals, you can use that freed up income to qualify for more properties. It's the same strategy we used with Carlos. We improved his existing portfolio first, then use the added cash flow to buy again. That's how smart investors scale. One property fuels the next one. Now remember this, every good investor also has an exit strategy. Whether that means refinancing again later, selling the upgrade, or creating a portfolio that funds your retirement, every decision today should lead toward the bigger picture. Don't just collect properties, build a plan. Now, so if you've been wondering how to make your rentals work harder for you, start with your loan. You might be one refinance away from hundreds of dollars in monthly income, or your next down payment. Don't forget to visit mykeymortgages.com or click that link below to schedule your free strategy call. And let's turn your rentals into a cash flow machine. That's your sip of wisdom from the Mortgage Café with Angelica, where we turn home ownership into wealth one key at a time. If you found this helpful, watch my next video, how to buy your first investment property with zero out of pocket. I'll show you exactly how to combine your home equity with a DSCR loan to start investing right away. Have a good one.